Hey, good evening, everyone. Hima here. It's about 7:30 Monday, October 23rd. Now, you'll see that I have the chart of Facebook in front of us, and that's because I was taking a look at the FAANG stocks and noticed something interesting across all of them pertaining to RSI power zones, which is my indicator on the bottom. This is the same as RSI Hima for any of you who have purchased it from me, and pertaining to price action. So this chart of Facebook here shows a couple different trend lines that I had drawn out since the spring, and you can see how the intersection of this purple trend line, which connected these wedge lows, if you will, as well as this rising trend line, which was former resistance and became support, practically called the low on September 25th. And this was obviously a great buying opportunity. Also, the RSI power zones went to extremely oversold levels, even though they were sort of in no man's land, not particularly in the bull support zone or the bear support zone. The interesting thing now is, as this Fibonacci retracement shows, so something that I do with my Fibonacci is my default Fibonacci is actually just 50%. That's really all I care about. And you'll see why, because in this situation here, obviously we had a very bearish candle in today's session, but I do see key support at 169.15 because it's a 50% retracement of the move since the September 25th low. Also, there's this little pivot bar here. Those of you who have taken my workshops or skinny subscribers know the value of these types of pivots and how to identify them, and this is coming in at 169.48. So if we overlap the two, and take a look and see where this exact zone of support is, you can see it's right around 169.50 to 169.75, you can call it. So that's the key support on Facebook that I'd watch, knowing also that the RSI is now at the recent previous swing low. So what happened is the RSI descended and descended and descended during that whole wedge formation and even that September 25th fallout, right? But then rallied, came back to previous resistance, and is now back to previous support. It's a mirror image or symmetry thing. This is not saying that I'm calling a low at 169.50. I'm just pointing out that it's very key support and that the RSI is primed to potentially form a low in the bull support zone. Moving on to A for Apple. Here you can see that I had this trend line that I actually drew at the gap higher back in February, connecting the lows in June. And this actually held as support on a closed basis if you're looking for a two-session confirmation, again on September 25th. Now, on the RSI power zones, something that I noticed as well was that shortly after you could draw that trend line, there was a extreme peak in the RSI at 89.66. That was the beginning of it unwinding lower. And the trend line here, the dotted gray trend line joining the RSI highs, was useful to see when momentum might be just petering out for a while over the coming months. So what I'm seeing here is something really, really precise. I drew the 50% retracement of the latest swing, including the gap down here, and it came out to 155.02. The low on that was last Thursday, the 19th, 155.02. And it's just hanging out since. So the Apple chart is at the key support already of a 50% retracement, and it's got the cushion of this rising orange trend line. I'm not saying again that it's going to hold this for sure and then blast higher, but it's just primed to be in this area where even if it has a little bit more corrective weakness, this could be potentially a great buying opportunity for a return up to 161 area or even to the all-time high up near 165. Now looking at A for Amazon, here we got to squish the chart up a lot more back to last year's price action. So essentially 2 years worth of price action coming in on this chart. You can see that I had a trend line that connected two major lows once confirmed earlier this year, and then I projected. That's why the upper line is dashed, is to show that's an exact parallel projection of the lower line. That obviously was pretty useful when it came to looking at the weakness off the late July highs. Coming down, looking at the RSI power zones and zooming into the more recent price action, you can see that there is again a descending trend line that has just limited the RSI in terms of its overbought levels. Okay, so the fact that we recently approached it and the RSI shied away from that resistance shows that it's a pretty strong resistance that's in place. But you can see that Amazon is also at the 50% retracement. It did close below it today, so this is a little bit more of a bearish chart among the FAANG group. But if it manages to eke out a close above that level tomorrow or form a bullish candlestick pattern or even an inside day, then that again might be a good opportunity to watch for a resumption higher. And the upside targets actually fit within this entire large range here. So the low of this bar at 1,040.18, then the midpoint at 1,061.75, and then the high at 1,083.31. So again, just some major levels to watch. The big support that has been holding on Amazon has been all of this price action above this old high from April 5th of this year. So that's still the major support, although we might be testing a pretty key short-term support level here around the 50% retracement, as I said, of this latest leg higher, which is exactly 971.61. Here in the Netflix chart, I just wanted to squish things up big time for some perspective here. Okay, look at all the times that the RSI managed to reach the bull resistance zone, extending up to 80 to 90 before truly becoming overbought. Now, if we zoom into more recent price action, I'm talking about everything that's gone on since the gap higher during the summertime. So let's look at where prices came to after this gap. About 50%. Consolidated, but held at 50%. The next rally higher corrected and held at 50%. A double bottom formed. So, as you might suspect, I am looking to see if the 50% retracement holds as well here, and it looks like we're very close to it. This is also right on top of an old high, and old highs become new support when you're rallying through them very often. So I think that Netflix is much more primed to be a buy relatively soon if it can hold this support, all right? I'm not in the business of picking bottoms before they're formed. I'm just trying to bring your attention to some key support that's been going on throughout. Now, I didn't have a line previously drawn here, but I'm going to draw what I think would be a good support to watch on the RSI, which would be connecting these series of higher lows. So see how not only can we use the zones, but we can actually draw on momentum the way we do with price. And this trend line seems to be a good one to watch. If we manage to hold a 50% retracement, so that's about 190.47, and RSI holds somewhere above this great trend line, again, might be a great buying opportunity, at least in the short term, if not the long term. Last but not least, here we have Google. Now, these previous yellow highlights show times when this stock held at projected resistance that I had drawn based off much older price action. So if I zoom in here, you can see that on this chart, way back when I drew projections off in advance, projected from the low in late 2015, and along the way that has held resistance. So that's still a relevant projection to watch. And with the current price action, it's obviously all taking place below the next projection at 112.5%. But here we've got a potential double top type situation. However, look at the RSI and look at where it's pulling back to. We've got this support trend line that's been coming in since this entire consolidation has been developing over the past several months here. And so looking at the 50% retracement here, I think this is an important support to monitor. If these shares pull back and actually hold somewhere around 970, with the RSI holding this rising gray dotted trend line, then that would be the first time in this consolidation that the midpoint actually held. And that would suggest, depending on how it moves out from there, say it rallies higher, that it might be the end of this whole call it a basing or a cup pattern or whatever it is visually to you. Now, if we fall right through the 50% retracement, then that suggests that we're pulling back to the base of this pattern, which has been around 915 to 925. So that is my take on the FAANG stocks. Hope it's been helpful. And I will catch you next time.